Hello, what is a realistic monthly return on swing trading? If you are using long option and swing trading strategy, we are going to share our April 2025 monthly return. So for the month of April, we didn't make any money selling stocks. Because we trade dividend stocks, in April, we earn $125. In April, I didn't really buy stocks or sell stocks, and we make profit when we sell stocks. And since I didn't sell any stocks in April, therefore I didn't make any money. I do not include unrealized gain or unrealized loss, but what I actually realized by selling stocks. And as you can see, April, we purchased stocks once, but beside that, we didn't purchase any stock, we didn't sell any stocks. We only earn dividend income from stocks that we already have in our portfolio. If we compare April to March, in March we purchased stocks quite a bit. We sold few, and I noticed that in March stocks were a little bit on the low side. So we are able to purchase quite a bit of stocks, and I exhausted the fund in the account. So now having any much capital in the account, I didn't have money to buy more stocks, and I didn't really analyze stocks either, because once in a while when I check the account, stocks that I have in it are positive, the profit is low for me to sell them. So we purchased quite a bit in March. We didn't sell much in March because stocks were down. Therefore, we end up pretty much exhausting the capital in the account. And in April, having low capital in the account and not selling stocks because they were down, we didn't buy much more. Even though some of them, for the few times that I analyzed stocks, some of them were low, but I didn't have the funds to purchase, so I didn't analyze much stocks in April. We purchased one and we didn't sell anything. So even though we didn't realize any profit in April, it does not mean we didn't have stocks in our account. So the one that I highlighted are the stocks that we purchased for swing trading purposes, and the one that I now highlighted are stocks that we purchased prior to 2025 for dividend income purposes. So they have to be positive before I sell them to get rid of them. But as you can see, the one we purchased for swing trading purposes, most of them are negative. So they are unrealized losses because we didn't sell it, we didn't realize those losses. We have few that are on the positive side. The ones that are negative in parentheses, they are losses. And the ones that are positive are the profit, unrealized gain. And the way you find those numbers, when you pull the report from your brokerage account, you should be able to have the report like this. But the way it's calculated by the brokerage firm is by taking how much you pay for the stock minus the value of the stock at the time you pull the report. And how they calculate the value of the stocks, they are taking the price per share times the number of shares you have in the portfolio to find that number. So taking how much you pay for it minus how much the value is if you sell it at that time frame will give you the unrealized gain or the unrealized loss. So by just looking at those stocks, we can notice that few are positive but we didn't sell them. So even this one, MANH, no, I don't think that was on our list. Let's go to let's stop that. Okay, so MANH. So this is stocks for swing trading as well. And this one has a good amount of profits. And for that one, for instance, before I change it, the stock that were displayed before, SNPS, I believe, was the one we purchased in April. So I purchased a few times in 2024, and the purchase is sold using short option and swing trading strategy, and then I purchased it again, but that trend line ended and then it pulled back, and it has not been that high up for me to sell it. And when it reached this lower trend line, we bought it again, but it will have to go past where I purchased it before, pretty much reaching a new high before we sell it. So MLM, is it MLM? Okay, so MLM, and that is very confusing the way Charles Schwab does it, at least in my opinion. If you look at MLM, for instance, MLM is stating that we have $1,000 profit. If we come to the chart here, we purchased again in 2024 using short option and swing trading strategy, and the last time we purchased it again in 2024 was higher up, right around the high, and then it pulled back and has not gone back up there yet. So when it reached this lower trend line, that the long option and swing trading strategy that we are using in 2025, we purchased it again and it started going up, but it has not surpassed this yet. So technically, if I sell it right now because I have $1,000 profit, I will have a loss on this one but a profit on this one, based on how I recall my trade in my spreadsheet. If we go and look for that, therefore the way I like to do it is keep in mind how much I pay for it, the highest price that I pay for it, so that before I sell it, I make sure it reach that higher price minimum before I sell it, so that I make sure I make profit on both trades. So 2024 we pay $620 for it, and in March 2025 we pay $466. So currently is selling for $535. So therefore I have profit on one, the last one that I purchased, but not this one. But the way Charles Schwab is calculating it is using an average. At least that's what it's doing. So pretty much the way I understood the way they do it is, do you see the number of shares that I purchased here? And do you see how much I pay for those total? So if we take those two, it's giving us 11A15. So if we take our calculator here, 11A15.44, we are going to divide that by the total share, which is 24 for the 4 and then the 20. So if we take this number divided by 24, it's giving us 492. You see? So I think that's what just what is doing. So 492, if we take this number and subtract it from it, 492.31 minus 535.80, it'll give us $43.49. Ignore that minus sign. It's because of the way I did the calculation. But how much you sell now is higher than the average that we pay for it. So the difference between the two is a profit of $43.49. So since we have 24 share, we do that times 24, it's giving us that 1,043.76. So let's compare it to Charles Schwab and see if you see. So let's bring the calculator again. So that is how Charles Schwab is doing it. So if you purchase stocks at a price and then the price drop, you purchase it again. If you want to make profit on both purchases, it might be a good idea to track how much you are paying for those stocks so that you know how much you want to sell it. Like you know when the price exceed the highest price that you pay, if that is the strategy you are using. I do not like to sell stocks at a loss if I can help it. Therefore, I like to keep it. Usually, like in 2024, when I use short option and swing trading strategy, if I don't sell the stock that I purchased, I don't buy more. But by using long option and swing trading strategy for stocks that I purchased and the price dropped to, I purchased a little bit high and then the price dropped to the lowest up trend line that I like to buy it at, I will buy it again. And by doing that, I'm averaging the price that I pay for it. So therefore, Charles Schwab is using the total cost minus the total number of shares that I have to calculate an average cost. But by doing so, is estimating my profit high based on that, because the average cost will be lower than what I pay for the highest. So by looking at this, if I just went ahead and I sell it, I'll be losing money on the first purchase and making profits on the second one. And to both together could give me a profit, depending on how much profit I'm making on this and depending on how much I'm losing on this one. For this one though, since I purchased a lot of share at a lower price, it might work out, but I just preferred to wait. So because here I have a loss of about $100 each or so, so that'll be $400 there, and here I have less than $100 profits per share, but I have 20 of them. So that's just an example. So there is another one that Charles Schwab is saying, oh, I have $1,000 as well. We can go to that one. And technically, the reason why I will ignore that one as well is I purchased it at a low price there, and I'm aiming for the next high. So with long option long swing trading strategy, is good to know estimate where you want to buy and then have an idea where you want to sell. Let me take the arrow out of there, otherwise I'm putting arrow almost weird places on the things. And those arrows, I like to put them on the chart. It gives me an idea where I bought it and where I sold it. So the arrows are the facing up like that, shows usually where I bought it, and the one that I will turn upside down at the top like that, for instance, shows where I sold. So the lines are the long uptrend lines passing by the lows, or the support line is the support line passing by the lows of the chart, and then those, the one that it touch base with multiple times and it cross multiple years along up trend lines, and that is where I want to buy the lowest one, the valley. Although I will have line for the top as well, the upside wall of the mountain. If you see this mountain, for instance, when it's climbing up, is pulling back a little bit and going back up. There is a trend line there, or a support line there, supporting the wall, the upside wall of the mountain when it's doing this. So there is a wall here supporting this side of the mountain, and there is a wall here supporting the downside of the mountain. So I will have those multiple lines, and then I will see which one I'm comfortable buying at. It could be this one, it could be this one, or so forth. But then that is the entry point. When you choose your entry point, you choose your exit point. And for me, simple exit point, if I'm buying it this low, is the next high, because we are trading upward. Large cap stocks, they do go up quite a bit. You can see have highs. They reach a new high often or frequently. Therefore, I'm aiming for the next new high. So it will be for a while. I will be in it for a while. In the meantime, it's going to be going up, going down, going up, going down, and so forth. But that is the goal so far. And having that in mind, I will just compare where the price is to where I want to sell. Because this is the last high. When the price surpasses this, it will flag it and put a new high there. And that's where when I will sell it, if I feel like it's not going to continue going up, by just looking at what happened before. Because when it reached a new high here, it pulled back down to a lower level before it went back up. Having this in mind, I might decide to sell it at that when it reaches a next new high, and then when it pull back lower somewhere, I can buy it again to aim for the next high. It all depends, but I will compare what is happening when I'm buying it to when it touched base with that line in the past, to see if it lingered there for a while before leaving, to decide if I want to buy it or just wait. For instance, I bought it there, but somebody that didn't catch it there could still buy it later. You see, because it went up a little bit and pulled back to it again. So it lingered there. You can see how it did it here as well. It touched base with a few times before it took off. So there is a chance that even when it's doing this, it could try to come back down again to this line. But it might come down a little bit at a higher level, since this line is kind of tilted up. But it might try to come back to it before, taking off. So with those upward large cap, when they reach a lower level and start going up from there, they might linger there a little bit. So you are not missing out if you didn't buy the first round. And technically, I'm not trying to buy it at that line. I'm trying to buy around it when I have a confirmation that it start going up. But with this one, because I'm trading the same stocks over and over and over though, when it reached the line, I might even decided to just buy, if I know that that's the lowest point. Does that make sense? And I may now use that same strategy with this up here. Necessarily, if I have a feeling like there is a chance it might continue to go down. But for your first purchase of a stock you don't usually trade, it might make sense when it reaches the trend line you like to buy. You wait to start seeing higher lows before you buy. It gives you a confirmation that it might just be going down, and might getting ready to start going up. So you want few higher lows. This is higher than this one, and so forth. You might want a 2 or so before you buy. It might still turn around and come down, or it might just start going up. In this case that I bought it, it went back down before start going up. So anything is possible. But yeah, yeah, because I know that I bought it at this higher price, buying it somewhere here, it cannot get worse. Does that make sense? So, and that was the lowest price, although it could still go a little bit lower, but since that was the lowest support line that I have for it, chances that it will go below it, too far below it was kind of slim. Therefore, I went ahead and I paid for it. Why not? I already paid the highest price here for it. But that was the analogy behind this second purchase here. But you just try, and then you will see what work for you. That's why trading, having a stock watch list of the same stocks that you analyze daily when you can, and you just trade from it, allows you to get to know those stocks and take those small risks when possible, so that yeah, and you just learn from it. So that is which one? That one. This one is PWR. So again, for that one, for instance, PWR. Okay, so PWR, we bought it twice. So we bought it in February. You see the way we have the line for the other one. This is a wall supporting the upside wall of the mountain. So when you pull back to it, we bought it thinking it might go back up, but guess what? It went back down, got close to this lowest support line again, and we bought it again. So you see this example compared to the other one. For this one, it is higher past where we first bought it. So technically, this one, if we sell it right now, we'll make a good amount of profit. How much profit though? It may not necessarily be what just what I'll be showing us, based on how I enter things in my spreadsheet, because I will calculate the profit on this one, and then I'll calculate the profit on this one. Now combine the cost divided by, now combining the cost and then combining how much I pay for. I sold both of them, but I'll calculate the profit on each one by taking how much I sold this one minus how much I pay for it, how much I sold this one minus how much I pay for it. But at this point though, is higher up compared to where we pay here. But again, buying it at this lower level, since it reached that lower level, let's see, my understanding is I might as well just wait for the next high. And let's see, because it kind of moved along this quite a bit, it reached a new high before it pulled back down to it. So when, and then let's see, it reached another new high here. So when it reached a new high, I could sell it and then wait for that to touch base with the trend line again, and then I can buy. Although, let's see, yeah, and then from here it claimed it multiple times. So when it reached a new high here and pull back, and reach a new high again, pull back a little bit, it start claiming it. So pretty much it reached multiple highs along the way before it decided to come down again. So those are things I had to take into consideration when it reached the next high to decide if I want to sell in the trade, because it's going to reach multiple highs from that lower level. It could reach multiple highs, like reaching the highs, pulling back to a lower mid trend line and reaching, go back up again. So I might decide to stay in the trade for multiple highs for a while. This was 1 year time frame before I sell it. Alternatively, I could decide to combine long uptrend line with short uptrend line by waiting. I bought it at a long uptrend line. I could wait for that to reach a new high and then sell it. And when it reached this, when it pull back to start creating that upward. That's how you found it out. Thank you. when they start creating that upside wall of the mountain, the trend line is going to be doing that on. When they pull back to that trend line, I can buy. If reach a new high, I could sell, and so forth. But we will see. It's all about doing. It's just that we are trying to compare what it's doing to what it did in the past to see if there is a pattern there that we feel like it can replicate, and for us to make our decision based on that. Does not mean it's going to happen exactly that way. That's why I bought it there, thinking, well, it reached this wall support line again, it might go up. But guess what? It was done, and it pulled back down and start going up again. So when it pulled back down, I bought it again. But yeah, so that is just to share those few with you. And let's see. So because we didn't really sell stock during April, it's not much we can share on the daily sales or daily purchases, considering since we didn't really do mass trading in April, so there is not really much to share on that front at the detail level. So, and as for the rates, let's see, this is April. Is it April? Yeah, that'll be April here. Buy, sell. Did we sell anything in April? I don't recall selling anything in April. I had to. Oh, this is weekly. So for weekly, I don't even know what week is April. It'll be pretty much around this area. So it's going to be blank. That'll make sense. So, and for the monthly trade, and we didn't sell anything that we bought in. We didn't sell anything in April. Therefore, it's not going to show anything there. The percentage rate is 0. Because even though we bought something in April, it will only pull what we sold in April and the cost associated with it, regardless of when we bought it. So, but since we didn't sell anything in April, then there is no cost associated with what we sold to pull to this spreadsheet here. But yeah, that is just, since we have 0 profit in April, the detail may not really matter much, in the sense that the detail are going to be 0 as well. And if we look at the number of trade, since I try to track them, we bought once in April and that's it. We didn't sell anything. So thank you so much for watching. We thank you very much for your time. If you like to try to generate income outside of your job by trading stocks, you can start small and just go from there. It's good to start with stocks that are kind of stable, and large cap stocks, upward large cap stocks are those stocks that are stable. Not all of them cost a lot of money per share. You can start small, even if that's with $100. How much minimum is high enough to meet the requirement from the brokerage firm to open a brokerage account with them, and is high enough to buy one share of the stock you are interested in. And you just start small, and by using long option and swing trading strategy, you are not trading daily, you are not even trading weekly. You are waiting to buy at a long option line, which usually are very low, like at the valley of the mountain. Therefore, it takes a while for the stocks to pull back down to it, and when they pull back to it, it takes a while for the stocks to go back up and reach a new peak. Therefore, If you have a busy schedule with your job, you are not trading daily, you can just try to analyze stocks on a daily basis to get to familiarize yourself with the stocks you have on your watch list, and you just save money little by little. And when a stock is well positioned for you to buy a share, you just buy one share and you just continue like that. And when you sell, you make $1 profit after you pay the brokerage fee or so. That is okay, as long as you make a profit is what matters. It shows that you are mastering the strategy you chose to use. It shows that the strategy you are using is in line with the stocks you are trying to trade, and by just using those two, you will see stocks that are now working well with that strategy. You'll take them out of your list and then add more to it. It takes a while to design, to pick stocks, filter them for your watch list, but once you have it, you have it. But you can start with the large cap stable one, depending on the strategy you are using, because they do not fluctuate quickly. It gives you time. When you do not take an action, you still have chance to take it. Does that make sense? When you are hesitant to take an action, it can linger at a spot for a while for you to be able to take that, to feel confident and take that action. So, and because they are stable, even if you buy it end up being at a higher price, you can just leave it in your account until it becomes positive, because those are stable companies. They're not going anywhere. But just keep in mind that stocks do file bankruptcy. For strong companies though, it could take a while. So, but you just learn by doing, and by just buying one share at a time for any particular stock, you can stretch your money, your capital, your small capital, and then you can practice and see stocks that you are comfortable trading because they are working well with the strategy you are using. And the strategy is what you will customize, not the stocks that you are swing trading. So if the stocks is now working well with the strategy you are using, you might change stocks in your portfolio, and over time you'll have a good list of stocks that work well with your customized swing trading strategy that you are using with them. And you just swing trade from your list. You can have lists for small cap stocks, medium cap stocks, large cap stocks, or why not, when you find the best out of all those lists, you can combine them to have a short list of those stocks that those are the ones that you want to buy and you want to keep in your portfolio, and you want to sell it when they are positive or when they reach your exit point. But that is the goal. But you just start small. It is a journey and you just enjoy the process. But don't take any, if you are risk adverse, don't take any unnecessary risk. Just start small and push yourself to to get better and better. And just know that no risk, no reward. But again, it does not mean that you need to take unnecessary risks. It's not get rich quick scheme. And you can see that some month I have profit and some month I didn't. So, but they all add up. Just start small. When you are having profit, even $1 or few cents, that's profit. It shows that the strategy is working for you. The stocks you are trading might be a good one if you think they are not the one that are too volatile or changing, and just go from there and keep improving on the strategy you are using to customize it to meet your risk tolerance, your personality type, and why not the stocks that you chose to trade with using that strategy. So more for tips on how you can choose those stocks for your watch list. We do have a playlist for that, and the links will be in the description of the video, and we have some other playlists as well for other swing trading related videos. We thank you very much for watching our videos. We thank you very much for all your comments, and we thank you very much you all that subscribe to our channel. I'm Afiavi Liberman, Cross of Liberman Consulting L.L.C YouTube channel, and in soap.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Thank you. Well, for April, since stocks were down toward the end of March, in fact in March and in April, I didn't trade much. I didn't analyze stocks much. I took a break from it, and I started growing food in our garden so that I can grow more greens and save money on our groceries. So those are things that I share on our channel. Ways to save money, ways to make money. Not just one or the other, but a balance of both. And stretch your dollars, your hard work money, by trying to see ways you can keep your expenses low so that you can have some changes to put to work, so that your hard work earn money, a portion of it is working for you as well. And that is swing trading. Just one way to put your money to work. Not the only way, not the best way. It's not about the best. It's just about different streams of income. Swing trading is one of those. Especially if you have a job and you don't have the time to have your own side business. Investing in stocks and trading in stocks should be things that will be good you learn, so that you can learn how you can put your hard-earned money to work. You don't have to work, trade your time for every single dollar that you make, that you earn, but you want to see how you can put some of those hard-earned dollars to work as well, so that your money is working for you. And as you can see, even though I didn't trade any stocks, those stocks, they are dividend stocks. Some of them pay dividend, even though those large cap growth stock, they do not pay a lot of dividend, but they do pay some. So I was able to make $100 or so on them, and the dividend yield is there. You can see that the one that I highlighted as stocks for swing trading purposes, the stock is the dividend yield or rate, annual dividend rate is low. The one that I highlighted, that I say we purchased before 2025, in fact we purchased most of them before 2024. Most of them were purchased in 2023, and you can see that some of them have higher dividend yield. So, but those, they tend to be on kind of the higher dividend one, tend to be kind of stable or so this is profitable here. But yeah, those are in dividend income, you don't do much there, but it requires a lot of your money for the dividend from them to be kind of a lot of money. Does that make sense? But yeah, if you are making a lot of money from your job, maybe pulling some in dividend income for that to be growing there slowly might be an option. Otherwise, swing trading, you are a little bit more active and you are actually rolling your money. So, and again, I sell stocks, I have money to buy more stocks. So that makes sense. Since I purchased stocks in March and I exhausted our capital there and we didn't add more money in the account, this year we have now started adding more money in the account. So I'm low in capital there, and in April I didn't buy stocks much. So, but because I will sell and I will use that money to buy again, so the same capital I will roll it over and over and over, making profits on it. Even though we'll keep adding money to it, you sell stocks, you take that capital and the profit, you buy another stock again. So you are pretty much rolling. I don't know, I'm not saying it well, but you know what I mean by that. So, and it's more active, but it require a smaller capital amount. Since you are rolling it over and over, you are not stacking it there for that to be generating dividend. So you have to add more money to buy more stocks. But if you are selling it, pull your money and the profits, then you reinvest it again in something else and wait for that to become profitable to sell it again. So you are locking in those profits instead of letting them disappear, because these stocks is an upward stock. But guess what? It goes up, it pull back. So if you just put money in it because for dividend income purposes, it's going to be growing slowly at the valley line. So those temporary swings, you will be losing them, but it will be generating dividend income. If it pay dividend, it does pay dividend, and then it will be growing at this line here. But when you are swing trading it, you are locking in those swing away from the support line. You are locking them in. Keep in mind that you will be buying an S at a higher price than before, since the support line is kind of tilted up. Regardless, I do believe that those highs, when you lock them in, it'll offset that increase in price at the next valley. But again, it give you a cash flow. Does that make sense? It give you a cash flow. But when you are investing in dividend stocks just for dividend income purposes, that is a lot of money you'll be putting there. You are stocking your money there, hoping it will continue to increase in value, and you can have income through dividend, and you might have to sell the stocks to free your money at some point as well if you want. Or if you are investing in growth stocks that do not pay dividend or pay very little, you have to sell the stocks to pull your money out. It's still been growing at the valley, steadily growing up, accumulating over time. But swing trading it, and you'll be locking in those swing away from the trend line. At least that is my belief of it. So I like to do a combination of both. So thank you so much for your time. Do you swing trade? And which strategy do you use? Please share your experience with us in the comment section. Thank you.